Have any of you seen the latest Downton Abbey Grand Finale movie? It's a great film if you follow Downton Abbey, as many people do all over the world. And it depicts a time in the 1930s when the family have lost money on the stock market crash, the 1929 stock market. They've also been defrauded out of money, been embezzled by a crook. I won't tell you the whole plot, but like many families of that time, aristocratic families that have had money for hundreds of years in some cases, they are just feeling the pinch from higher taxes brought in by socialist governments, higher inheritance taxes, used to be called death duties, and that is affecting their cash flow. And some of them are having to sell things. Now, of course, you have these families that have perhaps made money, or their great grandfathers have made money. Maybe they were industrialists, maybe in the Industrial Revolution in the 1800s, for instance. They've made these big fortunes, and then it's gone down to the next generation and the next generation, and of course they're not as productive anymore. Some have had farmland and that sort of thing, so they've rented out to tenant farmers. But then that changed as well. So their income has gone down, but their expenses and their grand lifestyle is still there. They still have staff, gardeners, but they're not as productive as the people that created the fortune. It's called this second and third generation, as in the Chinese saying. So that's what's happening with them, and they're feeling the taxes that are coming through. And in fact, in the film, I won't tell you the whole plot, but in the film they are forced to sell a grand London mansion to sort of clear up things and pay off some debts, and then refurbish the big Downton Abbey, which is the estate in Yorkshire. Now, personally, I think that was a mistake. I know it's only a movie, but many of these things are true. You know, they talk about the Dorchester Hotel been sold by the family that owned Dorchester House, and now it's become a hotel. This was happening to a lot of families, not just them. And I don't quite agree with it. They should have held on to the asset by some way, maybe by borrowing against that asset and then leasing it out to someone, maybe a tenant or a hotel or an office block. But they could have held that asset for the family for future generations. It's easy to say that, but they didn't seem to be very well informed. They didn't have very good tax advice, for instance. Their property should have been in trust to protect them, as did the Duke of Westminster family. They've held property for 400 years. It's all intact. It's the estate is probably worth 10 billion, and it passed on to the latest Duke of Westminster tax-free because it's all in trust. They are thinking of not just them, but they're thinking about their next generation, the generation after, and the generation after that. So they see themselves as custodians of this wealth, not the owners of the wealth to go and blow it on fast cars and high living. So they're very much holding the family as trustees, really, to pass this on. And you could do the same thing as well. You've got to get your tax affairs in order, because the Labour government now are coming for you. They're coming for your inheritance. They're coming for possible CGT or capital gains tax on our homes, because the country is basically broke, isn't it? The borrowing for this year alone, this is not the national debt, this is the borrowing for this year alone, is 83 billion. And the year's not even finished yet. 83 billion that they've borrowed just to keep things ticking over. It's like living on a credit card or being in constant debt. And who's going to pay that off? Not the government, but taxpayers, us, you and me, are going to pay that off in the future. Our grandchildren will still be paying this debt. And that's aside from the 2.7 trillion, not billion, trillion pounds of the national debt that has been built up over the last 10, 15 years. And that the interest on that is running at £5,000 a second. The annual interest is more than the state pensions, education, business, and even defence. You know, you could put some of those together. It comes to something like 11 or 12% of the national income is spent just on covering that debt that the governments have I think built up over the years, and negligently built up that debt over the years. So that's what they're doing. That's why they're coming after us for more tax in the budget, which will be in November. Now, recently people were hoping for a relief by maybe a further reduction in interest rate, but the Bank of England said no. Why? Because inflation is now running at almost 4%, the official rate of inflation. So they couldn't cut interest rate. They're between a rock and a hard place. They can't get growth going. They can't cut interest rates because of inflation. So interest rates stayed at 4%. Now, they did cut interest rates by 0.25% in the last meeting of the Bank of England, but mortgage rates didn't go down. In fact, mortgage rates have gone up since then because the swap rates between the banks, the cost of borrowing money in between interbank is high. So this is why the mortgage rates have either stayed high or have just gone up a nudge. Because as the government is in so much debt, the cost of the government borrowing has gone up. So the yields on government bonds, these are the bonds that they issue to raise money, have gone up. Because the investors are saying, hold on a second, hold on, this is becoming a higher risk. So that's why the country is in a bit of trouble. However, savings rates went down, of course. Yeah, immediately get letters from your bank saying savings rates are going down from the 1st of October. Savings rates are hardly worth talking about anyway. You're never going to make that much money just putting your money into savings accounts. But they went down, just like that, whereas mortgage rates have gone up. It doesn't seem fair, does it? But having said that, you should be looking at your ISAs, because I think in the budget they will be cutting the amount that you can put into ISAs tax-free. So I think a record, was it 100 million went into ISAs just in the last month, because people are panicking. They're trying to put their money into ISAs. And these include, just the ordinary ISAs, the stocks and shares ISAs, and the lifetime ISAs, where you can get a bonus of up to £4,000 from the government. You should all be doing this if you're eligible for the lifetime ISAs. So do look at those, but look at the stocks and shares option if you're young and you want to save in the future. Don't put it all into just interest rate bearing. You've got to take your own financial advice on this. But if I was 21 again, I wish I would be putting my money into some long-term stock market based investments like a pension or an ISA. Not all of it, but at least a fair proportion of it, because otherwise, a lot of people at the moment will probably not be able to retire in any form of comfort. Just talk about the property market for now. We know that the market is slow at the moment, particularly at the higher end properties. I've said this before, it's not showing any sign of speeding up. So people are also leaving the UK. A good friend of mine who's a multi-millionaire, has got a huge fabulous mansion in Surrey. He's selling up and getting out. To cut a long story short, he's going to live in the Far East. He's taking his daughter and grandchildren with him, and they're going to put their children into international schools. Obviously, they're very wealthy people. They can just do that. But a lot of people like him are leaving, and it's sad because he'd worked abroad and he planned to come back to the UK to settle. But that's what's happening. We hear about landlords selling due to the Renters' Rights Bill, which is sailing through Parliament. It should become law quite soon. I don't know when it will be implemented, but a lot of landlords are panicking and selling. So who's buying those properties? Well, it's either other landlords or it's first-time buyers, second-time buyers buying up these properties. And other landlords would include organisations like BlackRock and John Lewis. Now, BlackRock and these hedge funds these big funds are investing millions, if not billions, in the UK into property, into sites for new data centres and that sort of thing. So there's a lot of investment coming into the UK. Some is leaving, of course, but we heard last week when Donald Trump was here that billions are going into the UK. In the northeast, for instance, they're building new technology centres, battery factories and that sort of thing. Now, of course, I've heard a lot of this before. There were people in the northeast saying about 4 or 5 years ago, invest up here, there's a big battery factory coming up here in the northeast, but that fell through in the end. So let's see where the money really, when it really comes in, let's see the money on the table. That's what I'd say. But certainly there were lots of big announcements when Trump was here. You had all the tech giants here, and they're all talking about investing in the UK, which is good news for the UK. But as for landlord opportunities, I think there are opportunities to buy properties, if not cheap, but they're not rising as fast. So there's opportunities to get in there and negotiate. And many smart investors will be doing that. Of course, the Renters' Rights Bill will give tenants more rights, but I don't think it's the end of the world. If you're a good, responsible landlord and you vet your tenants carefully, and you don't just let anybody into your property, then yeah, it could be a good thing. The periodic tenants are a worry for people. But then, as one investor pointed out to me, well, if you have a 12-month AST at the moment and you don't bring in a new one for that tenant, it rolls over into an effectively like a periodic tenancy anyway. The Section 21 notices are going, but personally I've only used it a handful of times actually. Most tenants have either left or of their own accord, or whatever. I've never had to, touch wood, enforce it like going through the courts or anything, but I know it will be tougher. But most landlords are happy if tenants want to stay 3, 4, 5 years. But you've got to do your homework. You've got to know what you're doing. Of course, you've got to follow the law to the letter. And be careful of some of these letting agents. They don't always know the rules themselves. They really don't. So you've got to be careful who you use a reputable firm, or learn it yourself and do it in the right way. So I wouldn't say it's all doom and gloom. There will be opportunities. There's always opportunities when everyone is selling and panicking. That's as Warren Buffett would say, that's the time when you've got to hold the firm, and maybe that's the time to invest. So thanks very much for listening, and I'll see you again in the next episode. And don't do like the Downton Abbey people. If you've got an asset and it's a good asset, hold on to it. That's your wealth for the future. Assets, as Robert Kiyosaki said when I met him at a seminar, he said, an asset puts money into your pocket, and a liability, like a car for instance, takes money out of your pocket. So hold on to your assets and reduce your liabilities. Thanks very much. Bye for now.